Good morning. So today, this morning, what we are going to be dealing with in our class this morning is market structure. Market, I mean, market structure. Now, in this market structure, few things that I want you to understand is that without the market structure, you can't do anything in the forex market. That's number one key point. And the market structure is actually going to show you the dynamism of the market, where it's going, and then where we are heading to in the market. So market structure is like your map towards the forex market, within the forex market. Let me say it like that, because it's actually the one that will let you know the direction. Either the market is going up, is coming down, or the market is ranging. So the market structure is divided into three aspects. Market structure is divided into three aspects, and we have, let me give it types of market structure. So number one, we have the uptrend. Number two, we have the downtrend, and number three, we have the sideways. Now, these are the three market structures that we have in the whole three market structure. So without all these three market structures, there is nothing you want to do in the market. That's the truth, because these are the only three ways whereby the markets move. I would rather prefer giving this thing the three ways the markets move self, rather than saying the market structure. So because it's actually in the market structure, three ways whereby the market moves. I want you to note something and understand one simple truth about the forex market. It is not as hard and it is not as complex as people think it is. Okay? So, and the only three truths that I want you to understand there is that two things are the only thing that you are here to do in this market. Number one thing is either you buy. Number two thing is either you sell. The final last thing that you can actually do, like the most extreme part of it and the most powerful part of it, is to wait. So those are the three things that you can do in the market, but you can only put two triggers. It's either you buy or you sell. So it is only the structure of the market that will not tell you what to do at a particular time. So let me break this thing down for you one by one. So if we really have to look at this from the onset, okay, so I said number one, we are having the uptrend. The uptrend. So I'll be breaking each and every one of these things. I'll be breaking them down for you before going fully into the market, and then I'll start giving you the examples of what you definitely need in this market. Okay, so this is a short example of an uptrend in the market. So I'll be giving you illustration about them. Illustration about the uptrend, the downtrend, and the sideways. Because in this class we are really going far. So over here on this uptrend, this part is going to be our point of support. This is our area of support. Okay. This place is going to be our area of resistance. So this is our resistance. Okay. And then when the market is moving either in an uptrend or in a downtrend or sideways, there is always a move that we have in the market. And this first move that you are having in the market is called the impulsive move. Now, when the market is going up, we have the series of highs and lows. We often have the series of highs and lows. So high, low, whatever. So from there we have the lower high, and then we have the higher low, and then higher high, lower high. So this is how it keeps moving upward. So the simple explanation of what I want you to understand here is this. Now, if you look at this structure from this impulsive move that I drew here, don't get it twisted. I will name everything for you. So from this impulsive move that I drew here to this retracement, because so to this retracement, to this impulsive move again, to this retracement, to this impulsive move again, all these things, they were within a pattern, a pattern of an uptrend, meaning that the trade is moving in a pattern up, down, up, down. But as you're looking at this, the first up that we have here does not break the previous low that we are having below here. So far that it doesn't break the previous low that we are having here, it signifies the fact that the market is going in an uptrend. Now, it does not now really matters if this thing is coming with a series of combinations of candles. You understand? So if it's coming with a series of combination of candles, that one is actually none of your business. So far, the direction of the market is definitely an uptrend and it's ranging towards the upside. So that is the main goal that you are looking towards. So for you to be able to identify your uptrend, your downtrend, or any kind of movement in the market as soon as possible, you just need to understand the direction of the market, and then you really need to understand the point whereby the market is within that time. So this is a perfect example of an uptrend. Then I'll be naming these zones, I'll be naming them for you. So I will call this impulsive move, I will name it IM, impulsive move, IM. So impulsive move, and then I will name this my retracement. This is the retracement, I will name it RT, retracement. So impulsive move is IM, so and retracement is your RT. So this is the low of the market, this is the low of an uptrend, and then this is uh the higher low, higher low. Now, why do I call it higher low? I will break it down for you. This is a low, right? This is a low, and this low is the one that created this high. So it's higher than this low. So this is your higher low, and this is your lower high. This is your lower high. Okay, lower high. So this is your lower high in this market here. So, and as you're looking at this, with the whole movement in the market, you will see that we are making a certain sense within this structure. So this is the reason why the market structure is something that is very, very important for you as a trader in the market. Because if you are unable to understand the series of these key points, you wouldn't be able to navigate through the market. So, and then this will actually discriminate within the market movement for you. Now, but before we can actually confirm an higher high over here, we need this lower high to break this higher low. We need this lower high here to break this higher low. The moment this higher low is broken, you are having higher high. So just understand it, and then so far you understand it and you digest it. So this thing is not going to be hard for you. Let me name this higher high double H. So higher high. So I will now call this place higher low. Okay, because this place is lower to this place, another higher high, then higher low, blah blah blah. So that is how it goes. Okay, so H, so HL, this is your support, your point of support, and so on. So, and higher high, higher low. So that is how the market structure in an uptrend. This is how it's been formed. So don't forget, this place is an impulsive move. Now this impulsive move is the movement that push up. So, and this is the main reason why it is not always good to do a counter trend when you are trading in the forex market. So because when the market is going in an uptrend, the series of impulsive moves that we are always having in the market will always be longer than the retracement. So when market is going in an uptrend, when market is going in an uptrend or downtrend, always note that the series of impulsive moves you will be having in the market are often so when the market is going in an uptrend or downtrend in the market, note that the series of impulsive moves you will be having in the market are often longer than the retracement. So do not so do not counter trend. I really have to write this down out clear for you like this, because it's something that I want you to take very, very serious, because this is one of the most mistakes that many traders they often do in the market, and it always results into loss for them. They will be like, I want to catch the retracement of this market when market is actually going in an uptrend. Something is going up. Let me give you an example. It's like you trying to climb through a ladder. As you're trying to climb through a ladder from down, you were going up, but as you are going through, you notice that there is a step above that is resisting you back downward. Now, because of that, you have something that you are aiming for above. So because of that short resistance that you are having above, let me say someone is putting a wire above, or let me just say a rope above. Meanwhile, you are just meant to shift the rope, then you move upward. So you now say, because of the rope, you now step there, then you are using your head to be pulling the rope a little bit and then be retracing yourself back downward. So it does not really make any sense, because where you are actually going through, with the kind of force that you are taking from down up to the higher point, you have enough energy to pull the rope off, and then you get to where you are going to. So if you have a master that is down there and it tells you that, what kind of nonsense are you doing there, cut the rope, then the order has been given to you, you move up immediately, meaning that the rope does not really have enough power to resist you downward. So this thing, if you apply your daily life activities into the forex market and into the financial market, trust me, you're definitely going to move forward in life, even in the market. So this is we are done with our uptrend over here. So let's come to our downtrend. Now, downtrend, that's number two, downtrend. So I want you to note something. Don't get it twisted, okay? So when market is coming from is coming in a downtrend, just the same way we have an uptrend. So markets always do something like this. So let me draw my trend line. Okay, this is my trend line down below here. So let me call this place my resistance Okay, resistance. Let me call this place my resistance. And then on your downtrend, your support is going to be here. Your support is going to be here, and this place is my support. Now, if you look at uptrend, you see the difference between the two. Our support was here, over here, and then our resistance was here. So this is your resistance on downtrend, and then this is your support on downtrend. Don't worry, I'll be showing you the example on charts. So when market is coming from resistance, this is your resistance on downtrend. You always have an impulsive move down to your support like this. So, and then from there you have your retracement. The retracement will not break above your resistance over here. Then it will come back again, down like this, down like this, like this, like this, so like this, and boom. So we're down like this. So this is your impulsive move, IM from above, and this is your retracement, RT. So don't forget RT. So over here on this downtrend, this is your high and this is your low, and this is your low. You know, it's coming from above. So it's coming from above. This is your lower high, sorry, this is your higher low, this is your higher low, and this is your lower low over here. This is your lower low, lower low. So okay, this is your lower low, and then this is another, this lower high, lower low, lower high, lower low. So because it's coming downward, so this is your lower high, lower low, lower high, lower low. So until it breaks above and becomes higher low, lower high, blah blah blah, and starts going up again. So that is how it is about downtrend. Okay, so about the downtrend, and let's come to the third part of it, which is let's come to number 3, which is our sideways in the market. And another name for this sideways is ranging market. Note that if the market is not going up and is not coming down, the last thing that is going to be doing for you is that it will be ranging. So which is your ranging market? So let me now draw this for you. This is how the number 3 works. This is how the number 3 works. You have your resistance above, okay, then you have your support below here. You have your support below, okay. So over here you have series of ranging in the market. It will not go up, it will not come down, it will not go up, it will not come down, so it will be doing blah blah blah. So this is for your ranging market, okay. So I'll call this point resistance. This is your resistance, and this place is your support. for the market. Resist. This is your resistance and your support in the market. So over here, we don't used to have impulsive move, blah blah blah. So it can just be impulsive move, retracement. So the impulsive move and the retracement, this, let me say it like this: we also have impulsive move and retracement on sideways or the ranging market, but in most cases with the impulsive move and the retracement, they will not break above each other. So something like wicks can actually come above whatever and then do like that, you understand? But we don't really have all this. So let me get to the live markets and try to make an explanation for you. Let me give you an instance. Over here, the GPBJPY here is going where? Is going in an uptrend. And if you really have to mark this as what I said earlier, so let me start my example all the way from here. So what is this on GPJPY? This is an uptrend. This is an uptrend. Okay, this is an uptrend. So, and if you look at it very, very well, if you look at it very, very well, so what is this? This is our point of support. This is my support on it. This is my support. And then this is the resistance from the example that I give to you. Now, if you look at the impulsive move with what I said here earlier, that when the market is going in an uptrend or downtrend, always know that the series of impulsive move you will be having in the market is often longer than the retracement. So do not counter trend. Now, if you look at here, this market is creating series of highs all the way from here and then retracement. So if you look at this place, we have a high, we have a low here, we have a high here. If you look at this retracement, it does not really retrace. So back up. So this is the retracement. Now, people that are selling all the way from here, they'll be like, okay, I'm selling for sell, blah blah blah. So all of these are still within our retracement in the market, because the market is doing what? Is going in an uptrend. And when the next uptrend started coming, you see what happens? Impulsive move. Impulsive move is always longer. They were always longer in the market, in the sense that the market will move with a very high volatility in the market. And then take a look at the retracement again. Take a look at the retracement again. So the market starts retracing again to here and then is moving back up. So it's moving back up. This is signifying for us that this market is going where? Is going in an uptrend. So that is the main reason why when the market is going in an uptrend, always make sure that you focus on buy side and not the sell side. You look for confirmation, you focus on the buy side and not the sell side. So when we get to that point, we're going to be talking more about it. Okay, so about confirmation, blah 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 and so on. So let me look for a sideways in the market, and then I'll be looking for a downtrend as well. So okay, then I'll be looking for a downtrend as well. Let me go on good. Let me go on good and see what we having in the market. Okay, I have one analysis that I'm waiting for today, and there is a trade that I want to take on good today. So I think I'm having a perfect example of a downtrend here. Thank you. So if you look at gold here, so this is a perfect example of a downtrend on gold. This is a perfect example of a downtrend on gold. What is gold doing here? It's coming all the way from up down here. It's coming all the way from up. If you look at this, so with what I explained earlier from there, you see, so we have a move, down. Okay, you see that, you see the retracement. So the impulsive move will always be longer, like it will be coming down with a full force than the retracement, in the market. And this is my point of resistance, and this is my point of support in the market. This is my support and this is my resistance. So the best thing to do on this downtrend, when the market was coming in a downtrend, is to always find a sell trade rather than buy. Okay, so thank you, and let's go on side. Let's look for sideways, the place whereby the market range, where the market ranges. So I can call this place sideways, sideways, this place. So we have the series of range here, but we does not really create the support too much like that over here. So but it's something that looks like this. I will look for another example for you. I'll look for another example for you. No, um I'm not really cool with this. I'm not really cool with this. So oh, lately the market on gold, the market is trending more than ranging. So it's trending more than ranging. If you look at here, we have, I can call this place a ranging market, because it does not really go up, it does not go up, it does not come down. We have a short range here. So, and if I really have to break this thing down to 30 minutes time frame, you see what I'm talking about. So over here, this is your support. Market create a support for you here, another support here, another support here, another support here, before it broke this support and started coming down. This is a resistance, this is a resistance. So you just range within here. So this resistance, resistance, and this place is my support. So, and this the support. So this is a perfect example of a ranging market. So okay, let me look for another point here so that we won't go to. Let me look for another point. Yeah, good. This is a perfect example of a ranging market. You look, this is our point of resistance, right? And this is my point of support in the market. It does not do what? It does not go up, it does not come down. It was ranging here, ranging before it started selling. Okay, this is our resistance and this is our support. So I really appreciate you for staying to this time in our class. All right, so I really appreciate your time here in our class. Then let's uh let me do a short recap for you. Okay, so and we get to see what we've been doing so far so good. So with the examples of everything that I've done so far so good, right, on the uptrend, the downtrend, and the sideways that we have in the market, as I explained earlier. So if you look at this is the uptrend, this is the downtrend, and this is the sideways or the ranging market. So on the market structure, so that is how it is in the market. So the market structure will tell us the direction of the market. So when the market is going up, you do what? You buy. And when the market is coming down, you do what? You sell. So how do we sell or how do we buy in the market? So these are the ways that we get to know what we do in the market. So when the market is going up here, I buy, and then when it's coming down, we do what? We sell. So I really appreciate your time for being here in this class once again. So I really wish you a wonderful time ahead of you. Subscribe to my channel, and please at the and make sure you come to I so I really appreciate your time for being here in the market. Kindly subscribe to my channel at the end of this so that you have enough time for you to be able to see more and more updates that is coming up about the financial market. Okay, so thank you very much. It's a pleasure to really have you here. I wish you a wonderful day. Bye.